Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a fantastic Friday so far. The cryptocurrency market is certainly seeing or catching some sort of a break. Currently, you guys know that we do not think that this is the ultimate bottom for the cryptocurrency space, given everything that we've been looking at in regards to the sort of macroeconomic landscape. We have previously looked at this long-term regression bands and the 200 weekly moving average, looked at historically how you've always found support here, but historically Bitcoin has never faced these kind of pressures, and that's something that we're going to be talking about in this video. We are also going to be getting into some of the news, like the fact that 72 out of the top 100 coins have fallen 90% or more. Very much bear market territory, and not far off bear market lows. In regards to some of these small altcoins. Some altcoins, like Luna, for example, have gone down significantly more. We know that 3 Arrows Capital essentially have not officially came out and said it, but it looks very much likely that they have been liquidated. BlockFi says it's liquidated, or it liquidated a large client amid 3ACs, 3 Arrows Capital, margin calls. We know about 3 Arrows Capitals because they invest in lots of altcoins, some of them within the Cardano space. And ultimately, they've kind of gone insolvent. And of course, we've got GBTC, which is Grayscale's Bitcoin essentially vehicle. Premium hits minus 34%, all-time low as crypto funds puke out tokens. So essentially, we're still seeing investors take risk off the table. And this is all to do with the macro backdrop. Let's take a look at the overall market. We are not even at $1 trillion in terms of market cap. At one point, we were at 3. This is definitely a bear market. I don't think it lasts, however, and I'm still going to maintain this bias for 2 years. I think you could actually see new all-time highs a lot sooner than that, or certainly sooner than a 4-year sort of cycle theory. And the reason being is just how intertwined crypto has become with the macro landscape and how that is going to be subject to changing once the pain has really been turned up. And we're getting close, guys. I'm not calling this a bottom. We looked at the long-term regression bands of 200 weekly moving average. But the issue you've got, and I'm going to pull up a tweet here from the market sniper, Francis, who we have a video coming out on Sunday evening with, where we get into all sorts of things. We actually saw the Fed meeting, the 75 basis points get implemented in together. So we'll be releasing that on Sunday evening for anybody that's interested. So make sure you mark that in your calendars. And essentially, he's looking at here, and this is a tweet to, or a rebuttal to what Raul is essentially talking about, looking at moving averages and things like that. None of these lows occurred during a macro secular debt system reversal in a collapsing debt system where money and hypervaluation assets are deflating. Bitcoin was born in QE1. Reflation system. So you've got to think Bitcoin came around in 2008. This was when, of course, after the financial crisis, Satoshi famously quoted that article saying the banks are doing the second round of stimulus, or bank bailouts, I should say. The government is essentially supporting banks, and money is just becoming more and more of a joke, and the real crack started to show in the fiat system. Since then, we've had a very accommodating market. If we look at the stock market, for example, take off the long-term regression bands, you can see that this was 2008 when Bitcoin was born. Markets generally, yes, they've had periods where they've seen a little bit of a pullback, have been in a bull run broadly since 2008. So Bitcoin has never had to endure, and there is still the possibility that things return and we do get a bounce here, and if the Fed, for example, came out and said they're going to put the interest rates into reverse and they're going to start stimulating again, we'd go back bullish. But that doesn't seem to be the case. So we've never, I hope you guys are seeing what I'm trying to say here in regards to using things like the long-term regression band and the 200 weekly moving average. Just because it's held previously doesn't mean it's going to hold again. And in actual fact, it's held previously in times of accommodating markets. This is not by any stretch of the imagination an accommodating market. We did a video on the NASDAQ where we essentially looked at the run-up from the 90s, 1990. That's not 1990. Round about here. And we basically, you can see this run-up that we had here. Obviously, this is the dot-com boom, which were only just more undervalued than the top of this. You can see from 2008, similar sort of thing. And I think there's a lot more downside for the tech stocks. And of course, crypto is largely going to get swept up in that. So, you know, again, NASDAQ, since 2008 when Bitcoin came out, markets have only really gone up. You've had this whole Tina mantra. It's just simply not the case anymore, guys. You know, and there's a lot more pain, I think, to come across the board. We're seeing mortgage rates go through the roof. We're seeing commodities continue to inflate. You know, the consumer is really getting pinched and punched at every point here. And he makes a really good point here, the market sniper. You guys know that we've been looking at the long-term regression bands on the 200 weekly moving average. And the point that he makes about these is a valid one. That's been the case in accommodating markets where things have generally gone up. Potentially no longer the case. And you want to look at the likes of Apple. You know, Apple is really a benchmark for the stock market. Come down to your 200 weekly moving average. I mean, if we get down there, where do you think crypto is going to be? And we do have lower targets for the cryptocurrency space. And we are still expecting more downside broadly. Doesn't mean that you can't have a rally. But eventually, you know, I'm not calling 20K, 21K a bottom. I think lower prices come, and I think this could be a bit of a trap. People are going to look at some of the metrics that we just spoke about, like the long term and the 200 weekly, and they're going to get a full sense of security, failing to understand that, you know, we haven't seen how bad things get. We're very much just starting to experience and to really get into some of the pain that markets have to offer. And markets look for pain. You know, they're very good at extracting money from the many into the hands of the few. Or, you know, you can put that however you want, you know, taking money from the impatient to the patient, whatever you may say. Looking at the DeFi index, this is the perpetual futures on FTX, so a derivative. DeFi's got hit hard, and there was the potential that DeFi may have had a structure that would have led to upside, but it just smashed straight through it. And you're coming down to some prior lows. Certainly, you know, if we look at individual DeFi protocols, let's take some of the biggest on Ethereum, if I can find them. Aave, for example, I think this went to 3 trillion at one point. You know, it's now down all the way at 813 million. So a significant fall from grace. Maker, you know, everything's getting smashed in this market, including the market cap itself. So it's still very much risk off for me. Again, bringing this article up, 72 of the top 100 coins have fallen 90% or more. Very much bear market territory, or bear market near bottom territory, you know, and that's what I can see this being some sort of a, and this is the thing for me that's going to wind the hell out of me up for Bitcoin. You're just going to range trade now, likely. You're going to have buyers, bidders here. You're also going to have stop losses for longs, you know, and it's going to basically just drive this range for a little bit longer. But the danger you've got is, well, we've seen this before, guys. And we were warning people, actually, that, look, you know, yes, we just started this one, but we had a significantly longer one that looked very similar to this one prior, and then it ultimately led to downsides, so some sort of a bear flagging structure before you get that continuation to the downside. Blockchain says, or BlockFi says, it liquidated a large client, so it's potential that 3 Hours Capital have been liquidated. I don't think they'd have sold their tokens yet, or those tokens would have hit the open market. It would have likely just meant that they, you know, BlockFi took custody of whatever they had on their balance sheet to cover whatever loans they had. They may look to sell. There's lots of risk. Short sellers are betting big money on cryptocurrency demise. It's very contagious, the kind of cascade of liquidations that may occur. You've got to remember as well for Bitcoin, how many people do you think get and have to start, you know, really reassessing when we start taking out the 20K range? That's the big thing for me. And in terms of an investor, the risk is still very much to the downside for me. We will see signs of this market bottoming, and to date, we haven't seen them, which leads me to believe that they aren't present. Yes, we know the RSI is exceptionally in oversold territory, but the problem with this is it can consolidate down here for a while. Just because it's down here, you know, and we've seen in certain market conditions, it saw a real rally up here. But just because it's down here doesn't mean that it can't consolidate for a period before we do get that eventual uptick. To leave on a good note, the good news is I don't think crypto goes anywhere. I really do believe, passionately believe, that this is a technological revolution that is going to change the world. Just like the railroad industry, just like the motoring industry, just like the age of computers, the PC industry, or revolution, just like, you know, the internet. These are all technological revolutions that we use in our day-to-day life. Blockchain is no different, in my opinion. And ultimately, through, you know, any growing process involves pain, involves pleasure. You know, it's just markets are markets, guys. You really need to understand that. One of the sayings that I love to throw around right now is that, you know, we can't change the weather, but we can make sure that we're dressed accordingly when we go outside. So you don't want to get caught in a storm in a t-shirt, a pair of shorts and flip-flops. Unless it's in a rainforest potentially, and then you might be all right. But typically, you don't want to get caught in a storm unequipped in terms of how you're dressed. And we've been trying to warn people for a while now, months now, that look, downside looks very, very likely. We're taking risk off the table. We're taking a majority cash position, ready to deploy back into the markets when we get some lower prices and discounted cryptos. And I can't help but feel like this may give people a full sense of security. If you do get a rally, I think it eventually gets killed, and we may be looking to potentially offload a little bit more crypto into that. Certainly, if I think I can get lower prices, wherever that will be. I'm not calling for 12K. You know, for me, I've got different bottoming targets that we're looking at in my Patreon. For anybody that's interested in my Patreon, there is a link in the description. The top tier is around about 30 Great British pounds, and I'm making sure that there's value there. You know, if I want, or the price is set at £30 a month, you've got to be getting more than £30 worth of value out of it every month. And that's something that, given how new it is, I think we've already achieved in a short period of time when the month isn't already over. All I've got for you in this video, guys, if you've enjoyed the content, a like is always appreciated. So is a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching, ladies and gents.